Palisade Radio is brought to you by First Majestic Silver Corp, one of the world's purest and fastest growing silver mining companies.
Welcome to another episode of Palisade Radio. This is your host, Colin Cattell, and on the line with us today is Rob McEwen. He's the founder and former CEO of the world's largest gold producer by market cap, and that's Goldcorp, of course. But Rob is now the current CEO and chairman of McEwen Mining. Rob, welcome to the show.
Thank you, Colin. Pleased to be on it.
You know, mining is arguably the worst business in the world, and that's a quote from my friend Doug Casey. It's a harsh statement, but there's some truth to be found there. Mining has not advanced significantly from a technological standpoint in the past couple decades. Political disruptions are always looming. You have the cyclical nature of the commodities, which means constant ups and downs. And then there's the environmental impact. But obviously there must be positive aspects of mining, and you've seen a lot of success in the sector. So I want to start out by asking you, Rob, why have you dedicated your entrepreneurial endeavors towards mining?
Well, one, I have a strong affinity for gold. I think it's money, and so I've focused most of my attention on gold mining. There's some silver now, but it's a precious metal as well. I think that the governments around the world, from time to time, are very abusive of their money supply and irresponsible with the amount of debt, and that individuals need to take steps to protect themselves against the actions of the government. And that sometimes it's just the governments get carried away with their zeal to make everybody happy and debase the currency. And I think we happen to be in one of those times. I also I grew up in the investment industry. Spent the first 18 years of my life in the investment industry, around gold bullion, gold mining shares. And I met a number of promoters, and a few of them did really well. And they made, one fellow in particular made a discovery and then lost it. He made a fortune, lost it. Another discovery, another fortune, lost it. Third discovery, he kept his fortune. And it demonstrated to me that all the big deposits in the world, all the exciting discoveries in the world have not been made, and that's going to continue. So it's an area, when the gold market or the precious metal market's running, you have enormous gains that can be realized there. It's also an industry, as you said, and quoting Doug Casey, that it's a poorly managed business. Coming from the investment industry, I felt I had a different perspective than a lot of the people in the industry. I didn't grow up with the same assumptions that became fundamental to my thinking about the industry, so I was able to challenge them. I was able to import technologies and attitudes from other industries and put it into an old industry that is in great need of other perspectives. And when you can do that, you can ask questions that are difficult for people in the business to ask because it's not something they think about because the fundamental unquestioned assumptions that lie in the industry. So I think it's where you can gain great financial rewards, and with those rewards you can do a lot of good things with society and hopefully make the world better as a result of the gains you can make in this industry. It's an industry where the probability of finding a new discovery is very, very low, but the possibility exists. And that's what's exciting about the industry. You can innovate, you can grow, and you can ride on the jet stream.
Well, that's exciting, and it's a very true point. I want to ask you about the cycle that we're in today. You've been through at least a few of these ups and down cycles, and by some measures, the one that we're in today in terms of the mining stocks has gone on longer and has gone down further, arguably, than any of the ones in the recent past. How much of the slump today is due to just normal commodity cycles of up and down, and is there anything that you can point to blame for why we're in the situation that we're in?
The slump isn't that much longer. If you look back to the 70s, 1970, gold was $40 an ounce. It ran up to $200 an ounce, so a five-fold increase by the beginning of 74, when it became legal for Americans to own gold again. 2 years later, it was just below 100, around 96. And then in 78, it got back up to $200. So there was a 4-year period where gold was down and then recovering. There were some pretty big losses there, losses of value. A lot of people discouraged by the performance of the industry. You saw it again in 99, 2001, where gold was down at $250 an ounce. So when I look at the industry, it is cyclical. Investors have to keep that in mind, that there will be a time it's going to go the other way, and that's just the nature of the beast. But it's, I'd say there's right now the state of the market is determined by the U.S. dollar price of gold. Everybody seems to be fixated on the dollar price of gold. And they're saying, all right, gold's off 45% from its high. The big gold stocks, the leaders, are down even further. Their balance sheets are encumbered by heavy debt loads. Their income statements are being reduced in size by hedging, by selling metal streams, by selling royalties, and just the low price of metal. So people are saying, I don't want to be here. But if you look at gold in other currencies, it's going up. And in some currencies, in the Canadian dollar, in the Australian dollar, it's 25% off its old high. If you were to look at gold in Russian rubles or in Brazilian reals, it's at all-time highs. It's higher than what it was back in September 2011 when it was $1,900 US. But in their local currency, it's much higher. And if you go back again to the 70s, the late 70s, in September 1979, gold was $400 an ounce. And then by January of 80, 3-4 months later, it was up to $800 an ounce. And during that period, the gold shares didn't run as much as gold. And in fact, it took until September of 80 before the gold shares hit their high. But gold in January was 800, and then it fell off to 650. And what the market wasn't appreciating was September of 79 at $400, and September 80 at 650. Gold is up more than 50%, and you started seeing a couple of quarters linked together of increasing cash flow and higher earnings. And that's when the market started buying. Today, we have a very similar situation happening in that Canadians, South African, and Australian gold stocks are all starting to generate healthy cash flow and, in a number of cases, increasing earnings. Well, they're starting to get earnings, and they're improving. So these stocks are starting to move as a result of their local expenses are in their domestic currency, but the revenue is in dollar terms, and so the revenue line's been opening up for them, and they're making money. And you're starting to see some interesting moves in the stock. I mean, if you look at the 52-week lows and the current price of, say, the Dow, it's plus 5%. If you look at gold, it's plus 7%. If you look at the GDXJ, the index for junior golds, it's up 12%. And the GDX, the senior gold stocks, they're up 13%, so better than twice what the Dow's done, low to current, in the last 52 weeks. Then if you look at Barrick, which has gotten all sorts of terrible press, since October, it's up 62%. And our own stock, we got beaten up badly, but since July of last year, to now, we're up over 80%. So this is a sector that a lot of people have gotten out of their portfolio. It's under-owned, it's unloved, and yet it's starting to generate some very interesting gains. And as more of those accumulate, I think you'll see more people coming into the market.
I've heard a couple main themes in the last 6 months. The first one you just touched on with the Canadian and Australian dollars being relatively low against the US dollar. The other one has been the steep decline in oil prices. And Rob, since you're the CEO and you're leading an actual mining company that sees the input costs of oil going into your production costs, I want to ask you how much of a significant factor you think that actually plays, if that's going to help in the turnaround of these mining shares moving up.
Colin, it depends on the type of mine and where they're located. For open pit operations, fuel costs will be a definite consideration, an improvement in the economics. Underground, it's to a much lesser degree. And then certain countries, we operate in Mexico and Argentina, so they subsidize their fuel costs, so we don't have as much of a benefit as other countries where there's no subsidy by the government. But it has just had a definite improvement. So if you were to look at Australia, Canada, South Africa, where there aren't subsidies, the impact of the fuel costs would be greater, a greater positive for those companies.
Thank you for that, Rob. And on to McEwen Mining, I want to talk about some of the results which you just released last week. Reported record production for 2015. It was 22% increase year over year, which is fantastic. As far as I know, you have over $30 million in cash and cash equivalents with no debt. So you've really not only done a great job in this environment, but you've built an even stronger company as a result of this bear market and very well positioned to come out of it. What can you tell us about what's going on at McEwen Mining?
Thank you for those comments. Well, as you stated, 2015 was a good year for us, despite our share performance. Production went up, costs went down. We were generating free cash flow in all quarters. Treasury increased. So much so that we were able to declare our dividend or capital distribution and do some share repurchase. I think what it's largely about is having financial discipline in place so that you're not jumping whenever someone comes along and says, here's some money, that you're not diluting your shareholders. And a large part of that comes from my own holdings in the company. I own 25% of the company, and my cost of those shares is $127 million. When I wake up each morning, I'm thinking not about how big the company needs to be, but how do we grow it in such a way that we increase the value behind every share, and that's reflected in a higher share price. I think companies like Remarco would be the classic case of what not to do. In their case, they fought really hard to get a permit, and they got their permit. Unfortunately, got their permit at the bottom of the gold market, and they still wanted to build their mine, and they rushed out and raised $300 million and diluted their shareholders by 80%. I don't think that's the way to build a mining company, and if one was a large shareholder in the company, you definitely wouldn't have done that. The gold isn't going to go away, and you can build it when the metal price is better, and you can see strong returns for your shareholders. We haven't sold royalties or metal streams, and we don't hedge. And to me, that's taking it all off the top line, and in depressed metal prices, it just further shrinks the margins so that when you look at the performance companies that were the royalty companies and the metal streaming companies, as opposed to the producers, they gave away their margins, and you can see the outperformance by the royalty companies and the metal streamers very clearly. And that's the price. So people say, well, I'll raise my money that way and it will be non-dilutive to my shareholders. And that's true. But what they don't say is that it's giving up the profits that the shareholders were expecting to see. To me, it's like PayPal loan, or payday loans, or a convenience store, where you pay a premium for that convenience. You pay a premium for that money in this market, and we haven't done that, and we won't do that because of the shareholdings.
And Rob, one other event that's been going on is the New York Stock Exchange, and I'm reading this from a press release back in November, stipulating that the average closing price of a listed company stock be above $1 per share. And of course, a couple months ago, McEwen Mining was struggling with keeping the dollar per share, but that may not be an issue anymore. You're well above $1.20 a share. I don't know if you've passed the required 30 consecutive trading days to maintain the NYSE listing, but what can you tell investors about that process?
Yes, we received notice back in July that we had fallen below the $1 level, and if you're down but for more than an average of 30 days, so you take an average of 30 days of your closing price below $1, they measure it at every month end. So there'll be this Friday, it will come up for review by the New York Stock Exchange. And barring any major reversal in the gold price and our share price between now and Friday, I have my fingers crossed and my toes crossed, but I think we've put that behind us, or will have put it behind us by the close on Friday. They measure every month at every month end, so I don't think it. I'm hopeful, very hopeful, it will not be an issue come close on Friday.
Great, thank you for that. Well, I want to ask you about the future, looking out over the next few years. We just discussed that you've built a company that has lasted through a bottom, and a bottom can only last so long. You've made predictions in the past for gold to hit $5,000 an ounce or above, which is not an outlandish thing to predict, considering it almost hit $2,000 already. What will the mining sector look like when gold's at $5,000 an ounce?
Well, there'll probably be a few more smiles in the industry. What will it look like? Well, I think right now we're going through a phase where there'll be further consolidation. The seniors going into this are right now shedding assets. They're trying to pay down their debt. And so I think there'll be new leaders out there, and they'll come from the ranks of the intermediates, and there will be new names that will be leading the market ahead. They will have more aggressive management. They'll probably see more ownership in the companies, and they'll be a little more careful, at least in the next 3 to 5 years, about how they build their projects, where they build their projects, and how much capital they need to build them. I would expect there should be a good margin in the business, and it will be one of the better performing sectors in the market 3-4 years out.
Okay, and in terms of McEwen Mining, what's the next few years look like? I know that you guys just brought on a new president a few weeks ago, which is Colin Sutherland. He's going to be helping you with leadership moving forward and planning for hopefully better market conditions. But you did this with Goldcorp. You merged several companies together, and you just made a Goliath of a mining company. And I would assume that you're trying to replicate that success through McEwen Mining. What are your plans to do so?
Our goal is to qualify for the S&P 500, and you might wonder why. What drives me there are a couple of reasons. One, there's a lot of money invested in the S&P 500 stocks. Index funds invested directly in the S&P have assets under management of more than $1.7 trillion. So a very large pool of money, and there's only one gold stock in there, and that's Newmont. You have a gold and copper company, Freeport, but that's it in terms of the space of companies in that mining companies, precious metal companies in there. And 99.9% of all the precious metal companies in the world are non-American companies. And in order to get into this index, you have to be an American company. McEwen Mining is a Colorado incorporated company. So we meet that fundamental test. We need a much larger market cap than what we have today, but I think over the next 5 years, we can grow considerably. We're expanding what we do domestically and organically, but we'll have to do 1 or 2 M&A transactions to get up to that size. And getting into the S&P 500 provides you a better shareholder base, a larger, more stable shareholder base, and a lower cost of capital. So it gives you a competitive edge over all the other producers out there. As I said, this is an opportune time to be looking for opportunities to combine with other companies. It's much more inexpensive than it was 3-4 years ago, and that's the attraction. But first, it was putting our company on a very solid basis where you're not pressured by debt, you haven't given away revenue through metal streaming and royalties, and if you're building cash, we're on the right foot going forward right now. So that's where we are. Achieve our goal and not build the company for the sake of size, build it for the sake of the underlying value per share and the share price. I do not take a salary. I do not get a bonus. I do not have any options. I haven't taken a salary or gotten a bonus for 10 years. So I'm going to make my money exactly the same way my shareholders make money, and that is through a higher share price.
Well, that's certainly not an easy combination to find in the mining sector today. Before we end, I just want to ask one last question pertaining to Argentina, where, of course, McEwen has production and assets. The regime just changed down there, and things have already been changing quite a bit. There's been an inflationary currency crisis down there the last few years. The new government, I believe, just let the exchange rate float. They're saying they're more pro-business. Are you having or seeing any effects from McEwen from this new regime at this point?
Yes, we are. We have a mine in Argentina, our San Jose mine. We own 49%. And our partner, 51% partner, Hochschild Mining, operates it. The change in the currency and the removal of an export tax on doré gold, which is the bar we pour at the mine, will have an immediate impact on the cash flow and earnings of that operation. They've removed a lot of the restrictions on taking money out. We were never really subject to that. But they're moving quickly. They're very pro-business, very pro-mining. And I think anyone with assets in Argentina are going to see those assets revalued by the marketplace as time goes by. I think a big hurdle for the country will be negotiating with their creditors in New York, and getting that behind them and opening the capital markets to the country. None of the ministers that have been appointed by the new government are career politicians. They're all people who came out of the business world, and they're looking at their country and they want it to move forward out of the days where of very populist governments that spend to buy votes. So I think Argentina is going to be the turnaround story of 2016 for the mining community.
All right. Well, Rob, it's really been a pleasure having you on. I know you're a busy man and you have a busy schedule, so thank you for cutting out the half hour to talk to our audience and share your story on McEwen Mining. I would give your coordinates and information, but everybody knows McEwen Mining and they know Rob McEwen, so they know where to find you. Thanks so much for coming on, Rob.
Colin, it's been a pleasure. Thank you for your interest.
think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen, or are you too stupid?